Many thanks, Shaz. Hello, everybody. Thanks for joining this DLT Ledgers webinar. Just as Shaz was mentioning, my name is Jos Mathew. I'm the Senior Business Lead and Client Director for DLT Ledgers based out of Singapore. And I would like to take the next 20 minutes or so to walk you through a framework on cross-border trade digitization that many of our clients have now embraced or are in the journey with us. Before I jump into it, I would like to give a little bit background about myself. I've been working in the area of cross-border trade for the last 20 plus years. And if you actually look at it, my entire career had some connectivity to trading in multiple geographies while managing the operations in those territories. In the last couple of years, I've been involved in the enterprise planning and performance space, where I was engaged more with various systems and processes. So that is my background. So let's get started. So today we'll be talking about cross-border trade digitization. So the first question that comes to our mind is, so what is cross-border trade? I hope you guys can see the slide. So what is cross-border trade? Simple definition, as you take it out of a dictionary, is that it's the flow of goods between two countries, different operating jurisdictions involving peoples and businesses. But if you take a closer look at it, you find that there are four flows that is clearly defined in cross-border trade. One is the flow of goods, the other is the flow of money, then there's the flow of documents, and the flow of contracts. Some of the problems that you see in cross-border trade today is that there's a lack of efficiency, there's lack of trust and transparency. It's combined with largely paper-based processes, causing massive delays based on unnecessary costs. So these are some of the estimates that we get from the market. It's about, when a transaction happens or a trade is executed, there's about 10 to 15 days wasted purely because of paper-based documentation and operational inefficiencies. Second, we found that about 20% premium is paid on financing due to the lack of the reliable and timely informations. Most importantly, about $1 billion money is lost through manual errors and miscommunications. And if you look at factors of financial inclusion, we find that about 1.6 trillion worth of trade is going unfinanced every year. And another key important element is about 10 billion worth of demurrage element and detention fees goes into a cross-border trade because some of the ports are congested and the amount of money that you have to pay to keep the ship or the cargo within the ports is actually phenomenal. So if you actually look at the problem that the world, global cross-border trade faces today, we understand that the world needs a smarter way to manage their cross-border trade. So what we see is a need for integrating all the four flows to ensure that there is a release of cash and also it generates supply chain efficiencies. And the solution that we can look at is to have a post-trade execution platform which integrates all the four flows, which is not just the flow of goods, but the flow of documents, the flow of money, and the flow of contract. So DLT Ledgers is a blockchain-based initiative which is working on the approach and the philosophy that we need to integrate all the four flows, which is the flow of goods, the flow of documents, the flow of money, and the flow of contracts into a single unified platform, which helps to release cash and generate supply chain efficiencies. So as we move forward, I'll be introducing DLT Ledgers to understand how cross-border trade digitization is supported and enabled using the blockchain-based DLT Ledgers private permission blockchain platform. So what are we looking at? We are looking at creating the trade flows between the different parties involved in that transaction. We call it as a trade execution engine, which is a requirement with a template to execute a smart contract, which is a basic element involved in blockchain. Networking all the different parties, which is using the dynamic consensus engine, the digital document exchange, which is a single repository, which is a secure vault for the different participants to look at the different trade documents involved. Then integration with the ERP systems so that the contracts are executed with seamlessly between the multi parties involved in the transaction. We also look at the rapid financing that is required, because there's a digital trade finance, which is an element with all the banks are looking at, where a lot of frauds have happened and there is a lot of errors, which has caused unwanted delays and loss of money for the banks. So there is an element of digital trade finance, which is a trusted channel for banks to fund a trusted network of customers. We also look at the tracing and the visibility element, where the shipping and the logistics companies through API connect with the system so that they have a real-time tracking of where the goods are at any given point of time. So it provides you an end-to-end tracking all across the transaction. So there are a lot of key modules that has been built in, which comes together to, or the right word would be to configure, so that all different participants in a transaction comes together on a single unified platform with real-time dynamic exchange of information through mutual consensus. So when we looked at cross-border trade and digitization of it using a post-trade execution platform, which is a digital system of engagement with the ecosystem partners with seamless connectivity with the systems of records in an organization, we have, in a short span of just 3 years since our inception, we have come out with about 3 billion worth of trade production live system, with 396 plus trade houses adopting our platforms and about 200 million plus blockchain transactions happening. These are a few of the recognitions that we have got, again, confirming and firming up the idea that there is a need for a real need for a post-trade execution platform for cross-border trade. So what are the benefits? Before I get into detailing on how we do it, I would like to present before you what are the benefits of coming into a digitized platform while you are in a cross-border trade. One of the key elements which I would place is the reduction in financing costs, which is about 15 to 20%. So as you can rightly point out, there is most of the financing documents and the trade documents that are getting automated, which reduces the cost by 5 to 10%. Additionally, you have multiple other areas where automation happens, which helps you to reduce the financing costs by 15 to 20%. I'll come into details as we move forward. Second one is the cycle time reduction in absolute terms. So for example, if it's a long haul, 45 days is a trade cycle. Say a cargo is moving from China to the United States of America, and usually it takes about 45 days to complete that trade cycle. Now with digitization, you're reducing it by 10 days. But if it's a short haul, for example, the shipment reaches in 15 days, but the document reaches in 25 days through the bank. Assuming there's a coal trade which is happening from Indonesia, and they just allow the wind to take the ship to India, it will only take 15 days, but the document would take me 25 days through the bank. So the 10 days that the stock is lying in the port, it attracts demurrages. But with digitization and reduction in the cycle times, we are helping to match the flow of goods with the flow of documents, enabling them to have a major significant gain in the demurrages. Look at some of the other benefits which they derive. One is the exponential increase in the ratings and the limits for financing under documentary credit or appreciation. One of the key aspects when you go to a bank for a pre-shipment support, which is basically you're asking with a paper the money to do a trade. And when there is two-party communications, it is quite difficult for bank to view you differently and give you funds. But with digitization giving about 60% more visibility to the bank, they are ready to look at your transaction, look at you as a different entity altogether, which helps you to actually develop a trust between the bank or the financial institution and the company, which drives an increase in the rating. So, for example, you might be a tier 3 customer for the bank, but with the visibility of enhanced by about, say, 50 to 60%, they are ready to look at you as a tier 2 customer. Or, additionally, you look at one of the key things, which is, the limit enhancement, which you are able to obtain through giving visibility to a bank. That's both at the pre-shipment as well as the post-shipment aspect. So that's one of the key benefits that you get by digitization in cross-border trade digitization. Additionally, there is also the process efficiency, which is brought into the system, which is both internal as well as external, which helps you to actually increase your fulfillment rates. So there's a reduction in the order unfulfillment rates because your reduced cycle times and your system works more optimally and efficiently, which is an added element of digitization in cross-border. If I were to give you an example, so I take one element of the benefit and I'm putting it across to you as multiple scenarios and trying to help you understand the annual savings that a company, just with the benefit that I've shown you, the multiple benefits out of that, I'm just taking one, which is the cycle time reduction, and trying to help you understand the value of cross-border trade digitization. Scenario one, where the company has a turnover of, say, about 100 million US dollars annually, which is about, we call it as an SME segment. Now, on a 1 million transaction, if he is looking at alternate financiers and not getting a good rate with the banks, we assume that they have an interest rate of about 10% annually. So that 1 million transaction multiplied by 10% of annual interest, the banking number of days is 360, so multiplied by 10, the number of days that they save, which will amount to about $3,000 approximately for a transaction value of 1 million. Now, interest saving for a trader with 100 million annual turnover, his annual savings, just with the reduction in cycle time, the amount of money that he saves, about 300,000 US dollars. Now, scenario two, company has a turnover of about 1 billion US dollars, which is a large enterprise segment. We keep the ticket size as the same, which is 1 million transaction. 1 million worth invoice being transacted, having an interest rate, because now he has a better arrangement with the bank. So he might be working at LIBOR plus 1.5%. So current rates of about hovering around 2% is the LIBOR. So 2 plus 1.5%, and is going to be about 3.5% is the total cost of funds. So looking at that as an annual interest rate, and then dividing it by the 360, which is the banking number of days in a year, and with 10 days, it's about $1,000 approximately that he saves. So interest saving for a 1 billion annual turnover company, which is a large enterprise, the annual savings will be about 1 million. So if you actually look at the spectrum, which is, if I can draw it here, from 300K to 1 million savings across the spectrum, which is small traders, to a large enterprise. So if you actually look at the spectrum, there is a capability on DLT Ledgers platform, which is a post-trade execution platform, for easily being deployable into a small trader or a large enterprise with this kind of savings. So what are we trying to say here? What we are trying to explain here is that this one element of a benefit can help you justify the business case and the investment that goes into cross-border trade digitization using a post-trade execution platform similar to DLT Ledgers platform. Yeah. Now, let's move on. So what are we talking about in terms of cross-border trade digitization? We are talking about getting a full value of digitization. So when we look at full value of digitization, as I was speaking earlier, we are looking at internal digitization as well as external digitization. So let's get into the back office of a trader or a large trading house. It all begins with a sale being executed. A trader says that I've closed a deal with somebody, and then he wants his back office to start doing all those activities which is involved in the post-trade execution. So we are coming as a post-trade execution platform and helping with the digitization. But let's look at the as-is process first. So when a trade begins after contracting, then you need to move that communication to your back office, which involves a trade operations, shipping logistics department, or a trade finance department, or a risk and treasury department, depending upon the size of the organization. You might have a separate business function which governs the risk and the treasury department. And then we have an ERP system. So some of these business functions would have their siloed, disparate systems, which might not be talking to each other. They might have a core ERP system or a CRM or a CTRM system, but everybody in each function will have their own systems to work with, but they don't speak to each other. And mostly we see that there are email exchanges, there are Excel that works with less connectivity or a single unified truth. So what are we trying to do here? We are looking at a complete digitization and a future looking back office. The future looking back office is a first leg of preparation to get your cross-border trade digitized. Some of the organizations, you find that most of them have a very strong internal system with proper standard flows, with the departments talking to each other with their unified systems. Well, we are not there. We will just only help with the external system of engagement if the internal systems are in place. But if the internal systems are not in place, we are flexible enough to build that capability for any organization. So when a sale happens and all these activities has to be executed, all participants within the business functions are called in for a specific transaction. So what we derive here is a cross-functional efficiency, which comes into play to ensure that the cycle times are reduced for back office activities. What are the key features or differentiators that we are bringing into? One is a single platform wherein everybody gets an alert and a notification as to what is the next step in the whole transaction. And each person from each business function, each staff, joins in with their credentials, with their user ID and password, and performs that task. And the navigation is much more intuitive on the platform. Additionally, there is something called as a digital file cabinet, which creates a secure vault for all the trade documents with fingerprints, which is a digital fingerprint generated, and a digital consensus happens which is called through a permissioned request from the initiator of the trade or the subscriber to the platform, who brings in its business partners through an permissioned access. Additionally, there is what we call as the smart contract trigger table, which is we have generated in the last 22 months of our preparation. We have created about multiple trigger tables for specific industries. We are agnostic to industries. We have metals and mining, agri commodities, we have oil and energy, we have mechanized trade. All of them has been added in so that, the smart contracts can be executed seamlessly or autonomously within the system. And then we can call in the respective participants to execute their task with a view into the folders that are within a secure vault, which we call as the digital file cabinet, which provides a digital unique hash, which is a 32-character crypto unique to the specific documents. So that's a very configurable system and a module, which allows you to also have a seamless integration through BC Link, which is called the blockchain link to the ERP systems, which provides the respective documents in terms of pro forma invoice, a purchase order, or a sales invoice, or a goods receipt note, or a packing list, or whatever certificates that's been generated. So we can also do a three-way matching with the PO receipts and the delivery order. So these are all elements that is built into the system, not just to provide enabler using a technology, but a digital solution that is end-to-end, covering multiple emerging technologies, elements of multiple emerging technologies, all built into one solution for cross-border trade. So how do we fit in? So the product fit into a customer landscape is precisely this. There will be a current landscape covering all the back office team with all these systems. Then we have the post-trade platform on top of it, creating a network. So what are we trying to help here is to help create a private permission network for the customer with the counterparties with high levels of visibility and high levels of or accountability. That's the value that what happens in when we have a network of suppliers and network of distributors which talk to each other, and it's private permission for the entity that runs the value chain. So they get a new level of visibility, they get a new level of accountability in the entire transaction. So in a nutshell, what we are trying to create here is a private digital network for trade benefiting everyone in the value chain. So this forms a framework for the cross-border trade digitization. We see traders increasing speed of their work by about 80%, reducing their financing costs. Banks getting about 60% more visibility, reducing their total turnaround times. Risk and fraud is much cut and reduced. Then their internal financing cost is coming down because of digital verifications and less paperwork. Auditors and regulators from time to time, because the current market scenarios want to have real-time informations, and with a credential that is extended to the auditors and regulators, they can have a view permissioned by the system to take a look at the immutable records and transaction, which gives them more confidence on the genuinity of the transaction. Look at the other ecosystem partner, like a distributor and a distribution and the logistics partner, maybe a freight forwarder or a shipper or a carrier, who gives operational efficiencies through this because there are real-time updates and optimal fulfillment rates. So any delays can be, looked at what is the bottleneck, and the chocks can be removed. Look at the networks that you create, which is the buyers and the sellers gaining reassurance now in terms of digital sourcing, which is now the European regulations coming up that after 2025, you need to provide a digital provenance for the stocks that is moving into Europe, or multiple other cases where the provenance becomes significant. So here he's a platform which helps you to support, especially with commodities trading and where the provenance becomes a significant element. So we have built through these few years of engagement with multiple parties, trading houses and corporates, that we are able to have a best practice on the platform, which enhances the value chain in terms of the benefits that's being laid out here. So we are providing the simplest way to digitize a cross-border trade. A case in hand is definitely, because that's maybe the next question. Can you show me an example? Yes, we have partnered with DBS, which is one of the prominent banks in Singapore. And if you would recall, they have been recognized as world's first digital bank by Euromoney in 2019. Through a partnership, what DBS wanted to do was to digitize their trade, the suppliers, and sustainability, and to get view into sustainability financing, which is a cheaper fund for traders. One of their customers is IRA Pope, and here's a video that would help you to understand how DBS was able to achieve what they wanted with IRA Pope. If you look at how DBS has been able to generate outcomes to digitization, is about 260 million worth of trades have been financed on the DLT Ledgers platform. There's a reduction in the total turnaround times, fraud, and human errors. And there is some facilitations which has happened on sustainability financing. Over to the video. Take a look.
IRA Pope is a global agri-commodity supply chain company. We are headquartered in Singapore. We deal mainly in dry agricultural commodities such as wheat, sugar, cotton, edible nuts, and pulses. We source from the countries that produce these products: Canada, Australia, the US, Brazil, Russia, Ukraine, and we ship it to our customer base in Asia and in the Middle East. Our customers are some of the largest food manufacturers in Asia, and they need to know where the product that they're sourcing from us is ultimately coming from. The solution is to implement blockchain into our transactions. In order to fully implement it, we needed a banking partner to come on board. DBS is one of the best with regards to its digital product offerings and its competencies in the digital space. So the discussion with DBS first started with a demo. They took a look at the platform developed, immediately thought that it would integrate very well with the API that they currently have, which is called Rapid. And following that, we then entered into a process in which DBS's technical team as well as DLT and our team interacted very closely over a 1 to 2 month period to perfect that level of integration. We've already implemented in Australia with over 4,000 farmers over there. We're now moving the solution on to implement it in Canada, where we have another 4,000 to 5,000 farmers that we can bring on board onto the platform. When it's completely implemented across our operations, it can be a real game changer for ourselves as well as our customers. There are two key benefits that are provided by this solution that is not really offered in the marketplace today. Traceability is very important for our customers because they want to know exactly where the product is coming from, which countries it's being sourced from, what are some of the environmental practices that are being used with regards to cultivating the product, and how many intermediaries have handled the product before it's reached them. The second key benefit is the digitization of documents. Global commodity trade for the last few hundred years has been based on physical transfer of paper documents, and that comes with its own challenges with regards to timeliness and costly delays. I'm very happy to say that a lot of our business is now digitized, and a significant amount of our operations are now paperless as a result of the implementation of this platform. What immediately stood out for us is how innovative the bank is and how forthcoming they are. The most important thing that DBS has done, being the first bank to come on board onto our platform, and by helping us develop the platform the way that they have, the blockchain-powered platform has now become such a key part of our business. It's certainly growing, and especially so since we started collaborating on this platform and on the digital front. We've now fully integrated it in Australia, such that we are able to provide that level of traceability to both the bank and our customers. Something that AgroCorp is really excited about as a company is our growing presence in the plant protein space. In Canada, we've recently started a new manufacturing facility in which we use peas as a raw material and produce protein. These food manufacturers that buy the protein are also extremely interested in the traceability of the product, especially with regards to its environmental impact, something that we're looking to convey to them via our platform. So that's something that we're very committed to achieving, and it aligns well with what DBS is also trying to do, because sustainability is a key priority for the bank as well.
Yeah, I hope you guys have enjoyed the video, and it precisely was mentioning what we were discussing some time back. It's about, one of the two key things which he found as most important was traceability and document automation, which has happened within the system, and the kind of experience in terms of partnership that they have generated with the customer is phenomenal when we look at the financing elements and the growth that the company has experienced through this partnership. So that's the bulk of what I wanted to present today, and I would like to see if we can open it up for any questions from those who are online on this webinar. So I would like to take the rest of these webinars forward by taking some of the questions that you have. So please feel free to ask questions. This is just to give you an idea about where we stand as DLT Ledgers today. Launched in 2017, we have currently about 396 plus customers globally. 4,500 plus trades have been executed with a value of about 3 billion trade. We are a team of, or I would call it as a family of 56, with banks, about 65 of the banks, spread across multiple sectors, and we are operating like a super connector. So as a definition, if you would ask me what is DLT Ledgers platform, we are a digital system of engagement powered by blockchain technology for cross-border trade, digitization with capabilities to seamlessly connect with the systems of record, which is your ERP, CRM, or CTM. Okay, I see some of these questions here, and I think I have Amit asking a question on what's your differentiation with other blockchain-based trade platform. Well, Amit, you would have seen the video, and you would have heard Vishal mentioning that some of the key aspects in terms of features and modules that we provide, not just blockchain technology features, but additionally in terms of the solution is unmatched with the marketplace offers. So that I think answers that question. The three-way reconciliation is about the purchase order matching with the delivery order, as well as with the receipts or the invoice that is being raised, so that when you look at the supply chain efficiency that has to be derived. Simon, what we do is that the purchase order that is raised from, say, for example, the seller and the buyer raises a purchase order on the platform to the seller, because he is party to that transaction, that is visible not just to the seller, but also all the way back to the manufacturer, because they are also onboarded as as an ecosystem partner. So that purchase order matches with the delivery order that is issued from the respective factories, and it is also matched with the invoice, the commercial invoice that is raised from the seller company. I hope I have answered that question. Okay, Creation is asking a question: how do you integrate with the ERP system and other partners in the ecosystem like shipment logistics providers and brings them together on a whole end-to-end digital trade? Yes, we have something called as a BC link, which is called the blockchain link, which is a connector, which is an integration layer certified by Microsoft and certified by SAP. So that's been a core area which we have touched upon even prior to being on blockchain. We are certified with SAP and Microsoft. Additionally, we also, through APIs, we connect with the rest of the ecosystem. Russ asking how you said you save $1 million a year for a $1 billion company. That assumes you digitize every trade, but it's unlikely you will digitize every trade. So what savings does average customer make? Good question. Yeah, getting into more specific about a transaction. So if you look at how AgriCorp started, it's a journey. They evolved from 5% into digitization, with now they're coming up to 30% of that digitization. So if a 1 billion company with comes with 30% digitization, you can look at least 30% of the trade, which is again $300,000 just for a calculation and an argument purposes is 300,000 gain that you receive. I think again, Rasin has another question. Any digital traceability laws coming up in the US? There are many of the jurisdictions globally are looking at how to get benefits out of digitization, and there are customs and government bodies who are looking at various aspects like the ancestral docs, which comes from United Nations, and which becomes the basis for the Electronic Transactions Act, which is a bill that is to be passed in the parliaments in most of these countries. Joshua is asking a question on why private permission-based blockchain and not public. Spoke to suggested public as the way forward. Like, okay, so we are an enterprise-grade private permission blockchain, because we are targeting those trading houses and corporates and business houses who wants to have their own permission private blockchain, because business is all about the privacy that is involved with creating their own ecosystems, creating their own. There are business aspects or business elements which they don't want to make it public. There are various other public blockchains which is useful for verification purposes, authentication purposes, which we can at the application layer make it more interoperable, which we feel is the right approach. It's a debatable point. Would you have a case study for oil and gas industry? Yes, we are working with a couple of oil and gas, and we could, if you provide us the details, we could share it separately with you. Simon asking, can your system interact with the company's general ledger or purchase order system? Yes, we could. We'll have to, our consultants can get in touch with you and look at how we can address this. Could you elaborate more on the blockchain link you mentioned, please? Well, the blockchain link is an integration layer, which is certified by SAP as well as Microsoft. I think the scope of the discussion on the integration is beyond this webinar, and maybe we'll cover it up in one of the webinars, upcoming webinars. Yeah. All right. Is there any more questions that you would like to ask? Yeah. I think we are good. Thank you very much for your attendance. Over to you, Shah.